On Wednesday, December 18th, the FOMC will release its latest interest rate policy decision. Now, the futures market overwhelmingly expects a 25 basis point cut to the funds rate, with the CME FedWatch tool showing a 95.4% probability. This would represent a total of 100 basis points in cuts since the Fed began its easing cycle on September 18th. Now, when the easing cycle began, U.S. two-year Treasury yields were at a three-year low of around 3.58%. Since then, they've climbed to a four-month high of 4.38% on November 22nd. Now, the fact that two-year yields began rising at the exact time the Fed started lowering short-term rates puzzled many traders. Now, in retrospect, the market may have been signaling that the Fed's accommodation could be a bit premature and that a new wave of inflation was possible, potentially forcing the Fed to halt easing sooner than the market initially expected. Now, currently, the CME FedWatch tool is pricing in 45 basis points of easing throughout 2025, projecting a December 2025 rate of 3.9%. Now, this represents a significant shift from the September expectation of 2.8%. Now, on December 17th, the latest U.S. retail sales data showed a 0.7 month-over-month gain, slightly above the expected 0.6%. This news pushed two-year yields slightly lower to 4.26%, supporting the thesis that if the Fed slows its near-term easing, it may have less need to tighten 2 years down the road. Now, market attention will turn to the GDP data on December 19th and the PCE, the Fed's preferred inflation measure, on December 20th. Now, if a trader believes that two-year Treasury yields could rise from here, they could express that by buying the December two-year Treasury yield futures contract at 4.18 and target a move to the July highs of 4.75. Now, a stop for this trade could be placed below at 3.80. This trade can make $570 if the target is reached and risks $380 if you're stopped at your level. Now, if a trader believes yields could fall from here, they could sell that December two-year Treasury yield futures contract at 4.18 and target a move to the September lows of 3.55. Now, a stop for this trade could be placed above at 4.55. This trade can make $630 if the target is reached and risks $370 if you're stopped at your level.